Ethereum's base layer processes about 15 transactions per second. Visa processes up to 24,000. For Ethereum to become the settlement layer for global finance, the vision that underpins the institutional investment thesis, it needs to scale by orders of magnitude without sacrificing the decentralization that makes it trustworthy. Vitalik Buterin's roadmap for achieving this is one of the most complex engineering projects in software history. It has been executing on schedule for several years through a sequence of major upgrades: the merge in 2022, EV4844 proto-Danksharding in 2024, and full Danksharding approaching on the horizon. For institutional Ethereum holders, this roadmap is not optional reading. It defines the asset's competitive moat, its fee economics, and the timeline for when Layer 2 scaling delivers on its theoretical promise. This video maps the roadmap in terms institutional allocators can act on. Vitalik Buterin's Ethereum roadmap is organized into 5 phases with colorful names: the merge, the surge, the verge, the purge, and the splurge. The merge, proof-of-stake transition, is complete. The surge is the scaling phase. It encompasses EIP4844, proto-Danksharding, and full Danksharding, the upgrades that will reduce Layer 2 transaction costs by 10 to 100 times and eventually enable Ethereum to handle millions of transactions per second through its roll-up ecosystem. Danksharding specifically introduces a new data storage mechanism called blob transactions that allows Layer 2 rollups to post compressed transaction data to Ethereum cheaply. The verge introduces stateless verification, allowing any device to verify Ethereum blocks without storing the entire blockchain. The purge removes historical data to keep the chain lean. The splurge covers miscellaneous improvements. The surge is the most commercially significant phase for institutional investors because it directly determines Ethereum scalability and Layer 2 economics. The data on Ethereum's post-EIP4844 performance validates the roadmap's execution. EIP4844, implemented in March 2024, introduced blob transactions and reduced Layer 2 fees by 80 to 90% overnight. Arbitrum's median transaction fee dropped from approximately 50 cents to under 5 cents. Optimism's fees fell similarly. Total value locked across Ethereum Layer 2 networks exceeded $45 billion by Q1 2026, up from $12 billion before EIP4844. Daily active addresses on Layer 2 networks surpassed Layer 1 for the first time in 2025, a milestone that validates the rollup-centric scaling thesis. The Ethereum base layer processed approximately 1.1 million transactions per day in early 2026, while Layer 2 networks collectively processed over 10 million, demonstrating that the scaling architecture is working as designed. For institutional allocators, the most important comparison is between Ethereum's rollup-centric scaling approach and Solana's monolithic high-performance model. Ethereum's approach delegates execution to Layer 2 rollups while maintaining a secure, decentralized settlement layer at the base. This creates a multi-layer architecture where security is maximized at the base and throughput scales without limit at the execution layer. The trade-off is complexity. Bridging between L1 and L2 introduces latency and user experience friction. Solana's monolithic approach achieves 65,000 TPS at the base layer through aggressive hardware optimization, but this comes at the cost of higher validator hardware requirements and a smaller validator set. The Danksharding roadmap, if fully executed, will allow Ethereum's L2 ecosystem to process millions of TPS while Solana's single-layer architecture faces fundamental throughput limits. Ethereum's roadmap execution carries distinct institutional risks that long-term holders must monitor. Technical execution risk is primary. The roadmap involves coordinating thousands of independent validator nodes to upgrade simultaneously, and a failed upgrade could result in a network split or extended downtime, as seen with smaller-scale upgrade issues on Ethereum and other POS chains. Competitive risk is the second concern. If Solana, Aptos, or another monolithic chain achieves Ethereum-equivalent security with superior throughput before Danksharding is complete, Ethereum's developer ecosystem advantage could erode. Third is governance risk. Ethereum's upgrade process is highly decentralized, which is a security strength but a coordination weakness. EIPs require broad consensus, and contentious upgrades can delay the roadmap by years. EIP 4844's implementation in March 2024, known as the Denken upgrade, is the most significant roadmap milestone for institutional investors because it demonstrates the team's ability to execute on a complex technical upgrade at network scale. The upgrade introduced blob-carrying transactions that allow Layer 2 rollups to post data to Ethereum at a fraction of the previous cost. Within 30 days of Denken's activation, Layer 2 transaction volumes tripled as lower fees attracted new users. Arbitrum and Optimism transaction counts increased 200 to 300%. Total fees paid by L2 operators to Ethereum fell by over 80%. The Ethereum Foundation coordinated the upgrade across all major client teams, Geth, Lighthouse, POYSM, without a network split or extended downtime. The execution demonstrated that Ethereum's multi-client upgrade process, while complex, is functioning and delivering on the technical roadmap commitments. Institutions holding Ethereum should monitor the roadmap using a 4-milestone framework that tracks the upgrades most consequential for long-term value. The first milestone is full Danksharding implementation, expected 2026 to 2027, which will increase blob capacity by 10 to 100 times beyond EIP 4844. The second is Verkle tree migration, part of the Verge, which enables stateless clients and dramatically reduces the hardware requirements for running a full node. The third is history expiry, part of the Purge, which removes the need to store all historical data, further reducing node requirements and improving decentralization. The fourth is Ethereum Improvement Proposal 7702 and the broader account abstraction roadmap, which will enable smart contract wallets by default, a user experience breakthrough that could unlock the next wave of institutional application development. 3 institutional mistakes define poor Ethereum roadmap analysis. First, evaluating Ethereum's throughput based on base layer TPS without accounting for the L2 ecosystem. A 15 TPS metric for Ethereum in 2026 is deeply misleading when the L2 ecosystem is processing 10 million transactions per day. Second, treating all layer 2 networks as equivalent. Arbitrum, Optimism, ZK Sync, and Starknet have materially different security models, and institutions must distinguish between optimistic rollups and ZK rollups in their allocation analysis. Third, underestimating the timeline for full Danksharding completion. The roadmap is ambitious and well executed, but multi-year technical timelines carry real delay risk that long-term investment thesis should account for. Ethereum's roadmap is the most ambitious technical scaling project in blockchain history, and it is executing on schedule. The EIP 4844 Denken upgrade validated the process. Full Danksharding will complete the scaling architecture. For institutional holders, monitoring roadmap execution milestones is as important as monitoring price. The technical upgrades define Ethereum's long-term competitive position and fee economics. Ethereum's roadmap is not background noise. It is the technical due diligence that determines whether the investment thesis is executable. Understanding the milestones is essential. Subscribe to Crypto Mechanics for institutional-grade crypto analysis delivered weekly.